Hi, this video is about saving money using California Obamacare exchange covered CA, even if you're not on the exchange. We'll take an example. Joe is a 35-year-old self-employed professional looking for health insurance for himself. He lives in San Francisco and his earnings are big enough that he doesn't need tax subsidies. There's many places on the web where you can look for insurance, health insurance. And Joe found this website, which is very easy to use, has lots of data, and he found this silver plan for $356.32. That's CCHP Silver 70 HMO. The deductible is $2,000. The maximum out of pocket is $6,250. There's an additional brand and specialty drug deductible, which you can find out by clicking on the plan's details and then the plan's brochure, and then at the bottom of the page the drug deductible is specified, and this is standard for silver plans in California. We're going to look for Joe's plans or an equivalent among all the plans which are offered in covered CA for his county. So Joe's age is 35. His location is San Francisco. It's here. And there's two ways to search to reach the search page, which is the main page, the important page. It's either through the wizard like we did or through search policies, but we did the easier way first. And there are 20 policies in San Francisco that are available to him. Ranking is, the score is a percentile, which means that plans with 100% are the most competitive in that area according to our books, which is based on scenario analysis. And you can compare, click and compare, and you can go to the details of a plan by clicking on the plan's name. And at the bottom you have some links that give you some more information about the plan, whether it's Blue Shield CA, which is not a public company, so there's no financial link. There's Glassdoor. Everybody likes to work with happy people. Wikipedia, which is the history and the description of the company. The carrier site, if you want to contact them directly. So let's go back here and let's do something a bit different. Let's set a benchmark and set Joe's plan as the benchmark. Joe's Silver 70. The premium $356 plus some cents. Medical deductible is $2,000. The maximum out of pocket is $6,205, which is standard for silver plans. The drug deductible, we're going to set 0 here because possibly the carrier has an agreement that if Joe wants to get his medicine through the mail, then the deductible might be waived, at least partly. So we don't know that, so we'll just credit them and give it 0 here. The metal level is silver. And the plan level, we know it, so we might as well put it in. It's an HMO. So we save. Now we got 21 plans. And by and large, Joe is among the most competitive ones. And precisely because of this RX deductible. You see the plan here, which I highlight, is also a Silver 70 plan. It's actually the same plan as the one that Joe found on the website. The difference is that the plan on covered CA has an annual premium of $4,000, whereas Joe's plan on the website has an annual premium of $4,200. There's a difference of actually $190, $180 between the two. That's an important number to remember because we're going to use it later on. The plan that Joe found on the web has a premium of $15 more than the plan that's available on covered CA. And $15 per month, that's $180 per year. And these are premiums. Now premiums have this peculiarity that they increase by 3% per year of age. So an increase in premium of $180 at age 35, Joe's age, amounts to a an increase of $424 by the time he retires at age 65. And those extra payments, well, if he made them to himself instead of to the broker, he could save them at 5% or 2% above the inflation rate. And most professionals can do that. There's plenty of investment vehicles for doing that. In over 30 years, those payments amount to $17,000. In today's money, that's $7,000. So if you had $7,000 and I invested securely, I will have $17,000 in 30 years. And that $7,000, well, it can pay a few mortgage payments. You can pay a trip to Disneyland with the grandkids. There's a lot of things that you can do with that money that you won't do if you spend it. So the third step in discovering how to save money is to become your own customer sales investigator. And here are some questions for you. Why is health insurance cheaper in Los Angeles County? Another question, how much do you pay to have multi-state coverage? Is it worth it? Or how much does it cost you to keep your primary care physician? Is it better to have an HMO, which your primary care physician takes, or an EPO, which normally is cheaper, but in some cases actually the EPO is more expensive than the HMO. So if we save you some money, or if you just like us, please like us on Facebook. And if you don't like us, or you think we could do something better, also go on Facebook and tell us what you think about us.